Hey guys, Joe here from JCS-Charting. It's Sunday the 29th of December. We have a quick look at the DAX and the US markets. 2 weeks ago, that was my last update. I said I expect more selling until the end of December, beginning of January. I assume DAX is not really done down there. The US markets, it looks like they have made a new primary cycle low. A very sharp, quick sell into Christmas. That was also our Astro turning date. With DAX, I have my doubts that we are done down there. We had a very short week last week. The 23rd and the 27th were the only open cash days, and on Monday I gave 19,807 to my members for a stronger bounce. We actually touched that, we overshot there a little bit, and we tested that level several times, so that was actually great for scalping. Here we had another precise hit of 19,807, and on the 27th, that was Friday, we had a large futures gap right here. Due to the US markets, they were buying a lot over the Christmas holidays. They were open the entire time except Christmas Day, and then we reconfirmed 19,807 once again before grinding higher into Friday's evening session at DAX. Yeah, this is the latest chart from Friday evening. That is a 9 o'clock candle at 19,959 with the close, so that gave us another 150 points from my 19,807 level. 20,023 is the level which should break on Monday, if I'm right here, and we should run into these min targets of 20,086 and 2112. Last extension into 20,166. That area is very important for DAX. That will decide if we're going to see another major sell or if we grind higher at the German index. Yeah, here's a daily chart, a cash chart of the DAX, the Cetra indication, and I was showing that inverted shoulder head shoulder pattern, which hit already the first min target. The 100% move is still waiting at 2886. There was also that channel here, that rising flag channel here shown in gray. And once we look here a bit closer, once I zoom in, we see that that low from the 20th of December was just a retest of the October all-time high, and it was also a very nice hit of the 50% retracement of that rally here, which started at the end of November. And this might be a fake one, but it's worth mentioning it because of all these holidays. We have a so-called pop gun here, which got created on Friday. So that candle here is embedded in between this one and this candle. So that gives us a potential move higher. And the first duplication to the upside would match around the 61.8 retracement from that sell-off. And we might start another sell-off, a second leg down, to correct the entire primary cycle, which started here on the 5th of August. If you ask me, that sell-off looks a bit too tiny in my understanding, so I would assume another leg down here to retest the 200-day moving average. I will be wrong once we move higher and gonna break through 2189 or actually 20 to fill that gap here at 2241. Once we close that and run higher, I actually see new all-time highs. And this is a volatility index of the DAX, the VDAX, and I wanted to show you one thing. This is actually for members only. We were anticipating that sell-off here for that cycle low quite nicely before it popped up, and I want you to focus on these pops here, which are marked in green, associated with that positive histogram. And what is associated with it is that we have such a large gap of these two lines at the MACD. It's the same here. and the same here. And what usually happens is once they are open like that, the volatility usually pulls back after the first pop, and then there's another pop, another spike associated with it. And that looks quite the same. We had the same here in end of September, the same here in the middle of November. There might be another rug pull on volatility here into the beginning of January before there's another leg in volatility to the upside, which usually is associated with a sell-off at the index. And by the way, if you want more updates in more detail, you also get great updates about the smart money flow and other various indicators. That was here our topping indicator on the 10th of December. So we started selling DAX, and you see there are plenty of updates. For example, is the MMTW for DAX that measures the percentage of stocks which are above the 20-day moving average. That gives you actually a better understanding what is actually happening behind the scenes. We have the same for the S&P 500, by the way. We also look at the retail sentiment, smart money flow, and so on. And there were plenty of divergences in various indicators last week. And you can join us at www.jcs-charting.com for more of that. And we jump into the US markets. So this is the S&P 500, a cash chart, a daily time frame. We had a suggested low around Christmas. That was also our astro turning date. The low here occurred quite early. It is not 100% confirmed yet, but it looks like we made the low on the 20th of December. That might be also a primary cycle bottom, which means or which explains that intense rally, if that is a new primary cycle start. And the next low will be at the end of January. And we move into the H1 time frame. This is now the JFD indication. It's a little bit off the cash, and after we made that low on the 20th here, and that was actually before the cash market opened. We were rallying like crazy. We were actually shorting this one here as well. We missed out the shorts the longs completely, but we were shorting actually these highs here on Christmas Eve. That worked out nicely. We took our profits right here, and that was a perfect retouch of that channel, that bullish flag channel, which has actually no meaning now anymore. 6009 is needed for the bulls on Monday to grind higher here in that green sequence as long as 5858 holds. Also note that rally here from the low on the 20th got retraced almost by 50%, which is a good healthy sign for the S&P 500. However, I assume that we see 6095, which is almost at the all-time high, very soon. A quick look at the Nasdaq 100, also a cash chart, daily time frame, and the all-time high actually occurred here with a nice bearish intermarket divergence on the 16th of December. Nasdaq was the only one making new all-time high at that date, and it was very short selling, only over 5 trading days. Into the 20th as well, they all made that low so far. That low was at 2913. And we had actually, just want you to pay attention on that wedge. We had actually 2 touches here on the 23rd and on the 27th, which makes for me that pattern here to become invalid. That cycle low was suggested on the 26th, so this one here was on the early side as well, just before our astro turning date as well, which has a tolerance of plus minus 4 days, by the way. And the next low is suggested into the end of January, and the odds are also here quite good that this was just a very quick and sharp correction of the primary cycle, which is very rare, but in bullish markets it is likely to happen. So if this is a primary cycle bottom, we most likely see new all-time highs very soon. And we have a quick look at the Nasdaq weekly chart. Here is August 5th, where the primary cycle started. This is the first major cycle within the primary cycle. This is the second, and this is the third. We topped out now in week 19. And I know it looks a bit odd that this candle is a correction of that entire primary cycle. Even this correction here was bigger of a major cycle, which is just part of a primary cycle. But that is how it is sometimes in very bullish markets. And well, I must say, as long as we don't make a new all-time high, there's still the possibility that we run lower and that we correct even more, which I would prefer because we are still holding short positions. However, once we zoom out here a bit, we have bigger main cycles. And this one here, for example, started actually at the end of October, and it's still actually in a right-hand translation pattern. And this one here got time until May of next year to be corrected. And here we have another daily chart. It's a JFD indication. Don't pay too much attention on these price levels because they are a bit off. They are 50 to 70 points off the cash market. We had here that symmetrical triangle, which hit the first min target. There's still an open target at 22,932. There's that green sequence, which is triggered, and these are min targets for that green sequence there as well. You see that nice retouch of the all-time high out of July, which was here. That was that candle on the 20th. And on Friday, we touched the upper boundary of that channel. Once I zoom out, you know what I'm talking about. That channel here started in March 2020. It found the first hit here in November 21, then another touch at the bottom in January 23, and there we have in July of this year. It actually became a channel. Now Nasdaq broke out. And also the indicators we use, they are pretty much the same for the S&P and the Nasdaq on the weekly and daily basis, that we could actually run higher here. Similar patterns actually occurred in 2018, where we found also at the Ostro turning date into Christmas a bottom, and then we were running much, much higher. And this is the last chart for the Nasdaq, an hourly chart JFD indication. As I said, the price levels are a bit off, and we had actually nice short entries. We had a blue sequence here, which is deleted out of that chart already. At 21,803, we were actually shorting, and we were holding until we were hitting these min targets here of that red sequence. We just turned around before the last target on Friday. 21,574 is the next magnet on the JFD indication for the Nasdaq to run higher. And yeah, that sell-off we had, I'm not too sure, no, it's not in here, but that was also like a 50% correction of that run we had from the 20th of December. Yeah, last but not least, the Dow Jones Industrials. And I must say, this is the only one which qualifies for a normal primary cycle correction, because we were topping out at the beginning of December, and we had almost 3 weeks of selling into the 20th of December, which is quite normal if a primary cycle corrects. At the bottom here, that candle on the 20th actually created a so-called pop gun. If that pop gun pops to the upside, we see 44,288. If it pops to the downside, 41,073. I also prefer the upside here at the industrials. There's also a pop gun at the S&P and the Nasdaq, but only on the futures. You won't see it at the cash market. This is the last chart for today. I'm comparing the industrials with the transportations, the so-called Dow theory. And there isn't a divergent yet, The last one we have seen was at the top and it worked out great. The transportations were even selling longer than the industrials, but both made the low on the 20 years. And since then, they're running higher. So we are looking for divergence in case they sell off and the Dow makes a higher low, and this one here makes a lower low, or vice versa. That would be another buying opportunity if that happens. The same if we see that at the top, if the industrials are making new all-time highs and the transportations are failing to do the same. Yeah, that's about it. If you want more details, as I said before, you're welcome to join us at our blog, at our Discord. It's a great community there. We are over 150, I think by now, members. They're being active on a regular basis. And yeah, if you like this video, just leave me a like or a nice comment, and I see you tomorrow. Thank you for watching. Bye-bye.